Day trading is not for the weak, and it's very hard to understand what's right or what's wrong with information all over the place. That's why today I'm going to share my six-figure day trading strategy with you so I can make trading as simple as possible for you and you become a profitable trader this year. Welcome back to the channel, and if you are new, my name is Divine. I am a six-figure funded trader with Top Step, and I am on my way to make my first six figures in the futures market this year. And in today's video, we are going to be breaking down my strategy, how I lay it out. My job is to take you from a beginner trader to a professional trader and also make trading as simple as possible for you. So knowing that all this information is out here, we're going to get straight into the video. We're going to break down some things, and make sure you stay to the end because I always throw in a little something special for y'all to help y'all progress and start making money in these markets tomorrow. So let's get it. All right, guys. So what I'm going to show you, as usual, is the fifth grader, second grader level explanation of what it looks like with a line chart. And then we go straight into real examples. And then we tie it all up at the end with an example or two. So the first thing I'm looking for in my trading thing is we need four things. We need displacement or liquidity. We need premium and discount. We need to understand our supply and demand zones. And we also need the higher time frame bias aligned with time as far as our session timing, right? So when we talk about displacement, as you can see here, if you know, and I break down supply and demand all the time, this is a range of supply. We get a sweep of liquidity to the downside right here, meaning you will see candles go lower than opposite candles. And then we get that displacement or big move to the upside, which I'll show you with a candle. That is very, very key. So we get the liquidity sweep, which is price going below these lows, stacking orders. We sweep those levels, get a lot of sellers into the market going one way, and then we actually move to the upside abruptly, displacing, showing a lot of strength in the market, which shows intention in the market, right? So we want, that's one of them. That is like the key thing that we want to see on the charts to let us know, hey, buyers to control or sellers to control. Very, very simple. The second thing we're looking for is on our daily range and on our 1 hour range, we want to look at our premium and discount. So I always say the example, you want to buy a car in a discount and you want to sell a car in a premium. So anything, this is our 50% right here. Anything below that 50%, if you want to buy, is a discount. And then if we were to switch this around and turn it to a sell, anything above, that point from low to high, if we were looking to sell anything above the 50%, we would want to actually sell. So this is how we use premium and discount. It's very, very simple. But if you want to buy the market, price must be in the discount. And if you want to sell the market, price must be in the premium. That way, we know that you are protected because you don't, banks and hedge funds and these big, whatever central banks or whoever, they do not want to buy at a premium price unless they really want price to just go. But at the end of the day, they will bring the market all the way back into a discount and then they will push price all the way back up. With supply and demand, it's the same exact thing. We want to map out our levels. We want to know within this range from our low to our high, where is our key levels? What levels do we like? What levels do we trade off? Which levels are the best? And I'm going to break that down to you perfectly in this examples that I have. And then last things last, as you see this big circle, we want to be following the higher time frame bias. So if this was our bearish leg and we're moving to the upside, we inside this area, this circle here is what we want to see on the lower time frame, like the hour time frame. That way we could get in and enjoying the bullish ride on the daily time frame because the daily is a lot stronger than the lower time frame. So these are the things that we want. We always want a sweep of liquidity. We want to know our premium discount. We want to know our supply and demand zones. And then we also want to understand what time it is during the session, higher time frame bias, and time is amazing. It is the best thing here. If time is not aligned, don't take the trade. So with that being said, we're going to go into some real examples, go one by one, break it all down, and make this a pretty quick video for you. Let me know in the comments if you use any of these right now. Just let me know below because I do want to get a sense of what people use or don't use. That way I can actually help you guys learn more. So let me know in the comments if you use liquidity sweeps, displacement, supply and demand, premium, discount, time, and higher time frame bias. All right, guys. So the first thing we're going to go over is our premium and discount because this is very, very key. Remember what I said. You buy in the discount, you sell in the premium. Really quick, I want you guys to take this here, which is our fib retracement. So if you go over here to the left and it says on the second level, you might have to look for it to say fib retracement. All you will do is double click this and then you'll take 0 and you'll just set this up. So just pause the video really quick, look at this, that way you can set it up and you'll have the same settings on the chart for me. All right. When we're looking at this area. So we want to look at this space here. And what you want to see in this space is you always want to ask yourself, okay, where is my high and where's my low? Very, very simple. Because when you say where's my high, where's my low, you know, okay, we're in that range of price action. Meaning this price here, it's important to understand, but it's not important right now for the day that we're trading. So our high and our low is here. Very simple. Our low is there, our high is here. We are bullish, obviously. We're moving to the upside. So we are looking to buy. So when you're talking about premium and discount, you want to map out this premium level from the low. I mean, this fib level from the low to the high. So our 50% is right here at this level, this middle level right here. We know anything at that level we don't want to touch. We just stay away from it. I don't care if it's a beautiful supply zone there or demand zone there, you just don't touch it. You stay away from it. The reason being is, as you can see, if we drag and look over this level has just pure points, right? It has a point here, 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 right? And eventually it might even come back and create other ones there, right? So we know that that's a level that's not honest. It doesn't show us what we want to see, and it doesn't give us what we want to see. It plays around at that 50% because at the 50%, that is an equilibrium. That means buyers and sellers are at an equilibrium. They both are okay. They're both happy right now. They're not looking to buy or sell. They're trying to wait to see who's going to take control. We want to look at this 0.618, 0.70 level and below that because that is our discounted level. So when we looking at our high to low, it's very simple. When you're looking for examples, where's my high and my low? Draw out your fib from low to high because we are bullish. And then anything under that 50%, we could look. Now, this is a nice demand level below the 50%, but at the same time, it's right near the 50%. So usually if it's one below it, I just go to the one below it because it's a lot more respected and trustworthy. We have here our low and our high. We're bullish. We take our fib, we find our high and our low. Very simple. Our low, and then we find our high, and then we say, well, we don't know where we want to buy from in here or where price wants to come back to. We take our low to our high up here, and then price does what? It comes down into these imbalances right here. If you don't know about imbalances, I don't teach them that much, but I do utilize them. But price comes down to that 0.618 level and rejects, makes a beautiful rejection. As you can see, we took a high, took a low, took a high with this candle, and then we could enter somewhere around there to take out the highs. Price always comes back to that discount. So another example of a sell side where we have a high and a low, we actually broke some internal stuff. So we can say, hey, listen, where's our high? Okay, our high is here. This is our low. Price is probably going to want to come back to the premium. So we take our here to here. We say anything above that, we have a beautiful, beautiful level of supply up here, which we're going to talk about next. And we can map that out and then wait for price to just get to that level. We see what we like. It did get wicked a little bit, but you could take a sell beautifully from that level as it is respected. Again, this level swept liquidity, which we're going to talk about more of, gave us some displacement. And we want to say, where's our high and our low? Well, this is our high and this is our low. Let's see if price comes back to our discounted levels. Well, this is probably the high point, but let's see if price comes back to our discounted levels. As you can see, it comes right above the 50%, taps into this imbalance lined up right here beautifully because this is the move that created that break of structure or of demand. And then we can enter there. So understanding your premium and discount is very simple. All you have to do is go back in time, look at every piece of price action and say, hey, we are bearish right now. Where's my high and my low? Okay, we are bearish right now. Like, for example, we are bearish. This is my high. This was my most recent, like, true low. We take our fib, we go high to low, drag it over. We find levels in here. You see it comes above the 50%. We're key to sell off, and then we can sell off into the sunset, something like so. This is the very simple way of trading premium and discount. Listen, always remember, buy low, sell high, buy in the discount, sell in the premium. So now we're going to talk about supply and demand and how we can use supply and demand in the same way, along with premium and discount. All right, guys, so let's get to it. So supply and demand, all we want to know is we want to use supply and demand for two things. Points of interest, meaning we want to use supply or demand for a level that we are interested in when the market gets to that point. Doesn't mean we're going to take a trade from that point, but it is a point of interest. We put our alerts there, price gets there. We look to find our entry on a lower time frame or just enter the market. And then we also have a supply demand zone for an actual level that we are going to trade off. So when price does its thing, we say, hey, when price gets back to this level of demand, I'm going to buy. When price gets back to this level of supply, I'm going to sell. Very, very simple. So First thing we want to realize is when, again, let's start with our premium and discount. We are looking at this, what? Where is our high and our low? Well, we are bullish, so our low is this point, our extreme low, and this is our extreme high. We have, when we're looking for demand zones, we want to see price make an abrupt move to the up or downside. So we want to see that extreme strength to the upside, or we want to see that extreme strength to the downside. Very, very simple, right? So if I'm looking at these legs, I'm going to say, hey, listen, this was a beautiful level of demand right here. This was a beautiful level of demand right here. And we just drag it to this low. This was a beautiful level of demand that entered the market around these parts. Let's see where else. And that's pretty much it. Everything else is pretty much just making its way up. Yeah, you can consider them demands, but not very strong, and I'll explain why. So we just drag these over, and then we want to say, well, which one of these demand levels do I trade from, and how do I know when or when not to trade from them? You don't know, but what you do know is you have a premium and a discount. Right? So when you map out, when you see your range, your high and your low, you want to know, hey, I got my low, I got my high. Let me map out my fib. So we take it from our low point down here and we take it to our high point over here. Now we say we got a demand zone here. Well, demand could continue to hold here. So we still will be interested in this level, but we won't just take a risk entry, meaning we just won't enter in the market because price got to that level. We want to be cognizant and understanding that, be patient and let price show us what it wants to do first, and then we could get in. But but also a level like this, if this level breaks, then this is no longer a valid level. So we can get rid of that one. Anything here pretty much, it's in a discount, but it doesn't mean that price is just going to go from that level, right? Doesn't also mean that price is going to come all the way down here. Price could stop here and then go, right? So we don't know, but we want to say, hey, high quality setups, high probability setups, this is where we're looking at is going to be here. Why? Because it's under the 50%. We're in the discount. And it is a key level. And it also has one more thing that we didn't talk about, but we'll go into that next. So when we're looking at our supply and demand zones, this level did a bunch of things, but one thing that it does have is in the discount. When you're looking for your supply and demand zones, you want to look in the discount. So let's go look at a few examples of price staying in that discount and then, reacting from that demand zone. So for example, this low and this high that we looked at previously, again, if we just map out this, price came to the discount and it actually tagged into one of our beautiful supply and demand zones, which was right here. From high to low, we drag it over. Price came back to it beautifully. You could place a entry on here if you want. Stops right there, and you can target this high or just swing trade it if you want, depending on what you want. If we want to look at a sell, again, we have a nice supply zone here. Price comes in here, and it actually falls to the ground, and it falls very, very far. But this is our supply zone. Why? Because it's in a premium at this level. We got our high and our low. We map out our premium. We map out our levels. I mean, we map out our fib. We look for our premium levels. We see a beautiful level in the premium. You just want to look to the left. Our premium is here. Look to the left. See a level. You map it out, and then you look for price to. You look to trade price from those levels. Next time price gets there. Now, what is a valid and a really good supply zone that I'm looking at? Well, this ties into our displacement and liquidity as well. Well, we want price to sweep liquidity and we want it to have an imbalance as well, right? So there are supply and demand zones that may not do those things and they get swept. And I'm going to show you now. So we want a level that does what? And our premium, our discount is way down here. Nothing above that 50% I'm looking at. So everything from here down, I'm looking at. Well, then you can start to hone in on what you want and you can say, listen, I only want a level that shows me that it swept liquidity and gave a displacement in the market. Well, this level actually swept this low to the left. If we zoom in here, you can see that it was a candle here. Price swept that level and then made a move up. It had some displacement, meaning as you can see, this space between the candle, you see this wick and this wick does not align. It is an open imbalance space here between the two. Price price showed strength and took out the levels to the left. So that is a beautiful level that we could look to. We can say, hey, listen, I like that level. And then also down here, we have another one where price made a big sharp move, and then we make a sharp move to the upside, and all of this imbalance here, all of this imbalance down here, price comes back to that level, and that's something that we want to see. That imbalance, that displacement in the market shows strength from the buy side. It shows that the buyers gave no opportunity for sellers to get in, and that shows strength in the market, and is something that we want to look for when we're entering these markets. So when we come back over here and we say, hey, well, why didn't we like this level or this level? Well, where is our imbalance? There's no imbalance in here. There's no sweep of liquidity that really truly happened. Well, you can say this level swept liquidity, but it didn't really sweep because it pushed down and then it took a while to get up. You see this level push down and then it flew immediately, right? So we want to see that abrupt movement to the upside, like this one pushed down, but it took a while and then it flew away, right? So we want to see a sweep of key areas, right? Took some lows, and then we got our displacement in the market here. So we say, hey, listen, I like this level. You can draw it. I draw it from this candle because this candle really engulfs the entire area. So I just draw it from there and map it out as a point of interest to trade from when price comes back to that level. As you can see, price comes to that level, and then we end up getting an abrupt move. And then also a beautiful demand zone is here where we got a low and we have a high. It's all the same thing. We map out our premium and discount. You could take this low to this high, really. And we say anything under the 50% I'm interested in. Do we have a demand zone there? Yes, we have a demand zone with imbalance. We could take the range, which would be like this candle, 1, 2, and then a big move. And then we just drag that to the left. And then you see that you could take a beautiful entry from there as well and be respected. So instead of just taking this bigger entry with a bigger stop loss, you could get a tighter stop loss and then still target those daily targets that you are interested in. And that's what we're looking for. So though supply and demand is very simple, we want specific supply and demand zones. We want supply and demand zones that sweep liquidity, show displacement in the market, and then we move to the upside. All right. We're now going to go a little bit more into liquidity sweeps and displacement, and then show you how we align it with the trade really quick, and then just keep it simple for you guys. All right. All right, guys. So now we're going to talk about our liquidity really quick and our displacement. So as we look on the chart here, again, now we know our premium and discount. So sell in a premium, buy in a discount. And then we also know that when we are trying to sell in a premium, all we have to do is look at our premium levels, map out some important level of supply. And then also now we want to see, hey, what levels truly sweat liquidity? What can we consider a liquidity sweep, and how will we know? And for example, this point right here, as you can see, price was consolidating. We got a bunch of wicks, bunch of people getting in the market here. Price moves really strong to the upside and then moves really strong to the downside. Very simple. So essentially what we did here was take these highs, we swept liquidity from these levels, and then you see this strong black candle, which we will consider here as displacement in the market, meaning it was just a strength, a move that showed pure strength from one side of the market. We want those levels. So you have a supply level here, right? That, you know, moved up, moved down. It shows some black candles that look kind of strong, but it didn't displace the market. It didn't take lows, right? It just moved down. This one, you see a move in the market, a strength, a very, very strong move, and that's what we want to trade from. We know now that we like that level, we take our fib, we go from our high to our low, which is right here. We look for our premium levels. In this area, I would tell you to draw out this supplier demand zone, something like so, and factor in this green candles low because it's the entire move. That's something we could talk about in another video, but you just map out this low all the way to this high because it's a range of supply. And then as you can see, price comes right back into that displacement premium level. We put our stops up here and we could target this low, that trade would have smacked, or you could target the low lows and eventually that trade would have fell and made its way down. So that's what that liquidity sweep and then displacement in the market would look like. So our second example will be something like this, where we have our low and we have our high. Again, we map it out. All we want to do is map it out. We just want to understand what's going on. Now, when we say, well, how do we know it's a sweep? Well, we want to see price take out lows or take out highs first, and then make a displacement to the opposite direction. Meaning we have this level here, down here, we got this low, these lows, these lows. We take all of this liquidity here to the left. We sweep everything out, and then we make a strong, strong move to the upside, just nothing but buy candles. On the higher time frame, that will look like a buy candle like this, where it's just pure strength, right? We understand that. So though it's not a clean, clear imbalance in this level, We know that this is a displacement in the market. We took out highs. So we do what? We map, we want to find our supply and demand zones, but first we want to make sure we're buying in a discount. We take our fib, anything underneath this level. So we have a nice demand zone here and we have a nice demand zone down here. Very simple. We move our fib out the way and we just wait for price to make its way there. Price gets to this level and just pushes straight through it. So, right, we have a better one down here. This is a protected low. The reason we like the liquidity sweeps plus displacement is because those are protected levels now. As you can see, we get to that level in the discount. We can simply place our trade and drop it on this level here. No matter how far down it comes, it tests that low. It can't take that low. And you see, we could go target that high and we end up actually taking that high and we do it in a timely fashion and make it very, very clean. So that's what we want to see as that displacement and then a reverse or that displacement, that sweep of liquidity with this displacement in the market because it shows intention and it shows strength in the market. And we can always trade off those levels and protect it and all that kind of stuff. So the last thing we want to talk about really quick is just time of day and how you can enter trades with time aligned and be very, very confident in those trades because time is aligned. All right, guys, for our last segment, we're going to talk about time because time is the most important to me. If time is not aligned, I'm not taking a trade. I trade from 7:30 Central Standard Time all the way to 11 Central Standard Time. If I'm in a trade before that and it goes to like 1 or 2 o'clock profit target, that's fine. But I'm looking to enter between those times and take the most high quality trade. And it's very important. So actually, really quick in the comments, let me know where you are based out if you trade New York session or London session because I do want to make sure I'm helping y'all to the fullest ability. So if some of you guys do trade London, let me know in the comments because I could always map out stuff at the 2, 3 a.m. Let you see how these concepts work during London session as well as New York session. So when we're talking about time, this is an example we've seen before. So really quick, we have our sweep of liquidity. As you all know what that would look like, you want to see a big move to the upside, and then you want to see that displacement in the market, which we get right here, this strength. And then we just drag that over. Now, when we drag that level over, price came back to this really quick. But the key is what time did price come back to that? Well, we know that this is under our premium. We know that this is a key supply zone. We know that we have a liquidity sweep and displacement. The only thing now we need is time. And 7:30 to 11 Central Standard Time, or 8 it'll be 8-ish to 12 o'clock Central Eastern Time, New York. It's the same exact thing. So this is my Eastern times. So if we looked here, we get that big move to the downside. Price start making its way back up during New York session. 8, 9, 10 o'clock. We hit this level clean at 10. Once we hit that level, we can put our stops here. We can target the lows and we'll be out of this trade by 12 o'clock New York time. Very, very smooth trade, a nice 1 to 3, very quick. But that is as simple as it gets. Let's look at another example. Actually, the example right next to it, because now we have another supply level. Now this one, you can expect price to sweep this level a little bit because you still have this available and this level did not sweep. This is why we like to see this level sweep something before it makes the move down, right, on our entry. But in this case, because this level didn't sweep anything, it got swept. But that's fine because you can protect that and you can anticipate that. So for example, this level came up. This is our new supply level. We know we got a chain. We also know that this level still can hold. When we look to enter here, we want to align time because we have our premium levels from high to low. We know that this is a nice supply zone, and we know that we have a displacement in the market right here that came from this level. So when we look to enter here, price is here at 9 o'clock. It gets to that level. We can put our stops right up here. I will just protect these minimal highs for now, and then all you gotta do is just target the lows. And as you can see, you eventually get a clean trade. Nice 1 to 3 again. Just protecting. If you want to be super, super precise, you will get stopped out. I'm not like that. I always just protect something here that I believe price just won't go to. And then you get a beautiful, beautiful trade and you get more displacement throughout that trade. So this is the power of actually trading these kinds of levels because when we map it all together, you get that sweep, that displacement. That is a key footprint in the market that the market is showing us, hey, from this level, we like X buying or selling. So when we get back to that level, the higher probability that market is going to do that thing again is very, very high. So for our buy example, really, really fast, we have a high, low, higher high. This level came down and then moved abruptly to the upside. I like it. And what it did was took out these lows to the left here, swept those lows, and it also swept this low here. You can't really tell because it's within one little wick, but on the lower time frame, that is some key level within this low to high range here. We come back, we sweep those levels. We want to see our displacement in the market, as we can see here. We got our sweep, we got our displacement, we take our highs. All we want to do is take our high to low, which will be here, to find our discount. You know that is below this level here. So what I would do, because this is a imbalance here and it is a window of imbalance, something that I don't trade a lot, but when I see it, I just map it out. So I'll take this candle to from these high to these lows, and then we'll see when price gets back to that level. Price gets back to that level. We got a candle here, 3 in the morning, 4 in the morning, 5 in the morning, 6 in the morning, 7. Around my time to trade, you could just take the trade here overnight, or you could just wait here patiently on something like this candle here. And then you can put your stops here knowing that you could be protected. And then you get this big move to the upside, and you can hold that confidently going into the future, knowing that you got strength in the market and you are following the trend, and you have that sweep displacement premium discount level you buying. So you're looking for that discount level. And then we got it aligned with time because we have our 6, 7, 8 New York open times, and then we get that volume. So let me know in the comments what you think about this video, if how you would use these and everything like that. And then also let me know what other videos you want to use. I know a lot of people have been asking me about Discord and all this other stuff. Let me know what I can help you guys with in the comments below, and then I'll make videos on those for now. And we may have something coming up in the future, so stay tuned for that.